You're very welcome. As I said, this is National Cultivate Week. My name is David Layden. We work with Cultivate on a whole range of marketing initiatives. But this Cultivate Week is really a celebration of the credit unions movement involvement with Irish farm families. It's been a great initiative. It started off in 2018 and it's going from strength to strength. I do have a super panel of guests here tonight. And I'll start off with the chair of Cultivate and former IFA president, dairy farmer, Mr. Joe Healy. We've the beef editor of the Irish Farmers Journal, Adam Woods, head of farm support with IFAC, Philip O'Connor, and ACA General Secretary and Agri Advisor with Carl Consultancy, Breen Carl. So you're very welcome, gentlemen. And we'll start off with Joe Healy. And Joe, just you might welcome the audience here tonight to this webinar for National Cultivate Week.
Thanks very much, David, and good evening, everyone. Lovely fine evening here in the west of Ireland anyways, which is a welcome change from what we had for the last 2 to 3 weeks. Great to have so many people on. This is probably our main event for National Cultivate Week. Most of you know at this stage that Cultivate is the loan offering for farmers from credit unions. There's 47 credit unions in 25 counties around the country participating. They're members of Cultivate, and those 47 credit unions have 150 outlets. So, you know, no matter where you are, there's one fairly close to you, and a number more. There's about another 10 in the process of joining as we speak. And, you know, I was talking to one of the people in Cultivate yesterday from Cavan, and she mentioned that, you know, why would they not be in Cultivate? Because there's a loan offering there. It's competitive, it's quick, it's simple, it's local, it's flexible. And the other thing that we as farmers love, and I'm one of those, when you go in, there's some local person to talk to. You're not talking to a machine. So the findings from the recent survey based on last year was that loan applications were up 33% on the previous year. And that was also up on the year 2022 was up on 2021 as well. Sorry, 21 was up on 20 and 22 was up 33% on 2021. So, you know, farmers are voting with their feet. They're looking at credit unions now as a real alternative, a real option when they want farm finance. And the average loans is typical of you know, around the country, 31,500 over a term of 5 to 6 years, no exit fees, and that's what farmers want. It can be for anything from fencing to sheds to jeeps, machinery, and there's a good breakdown. And Adam will talk about the dry stock sector later. Over 2/3 comes from the dry stock sector. About a fifth comes from the dairy sector of the loans that are out. So it has grown from strength to strength from, you know, started off 5 to 6 years ago here in the West, and now it's within a kick of the cat of being national, totally national at this stage. And, you know, I suppose all we'd be asking is farmers, if you are looking for finance to do anything on the farm, give the credit union a shout just as fast and the same as you give the banks a shout, and make up your own mind in after that. But I think you'll be pleasantly surprised. Applications are processed very, very quickly. And, you know, I'm a farmer that if I want something, it's generally yesterday I want it. So there's a lot of people on here tonight that are probably in the same boat. So, David, there's 3 excellent speakers here tonight, 3 experts in their own fields. So I'll hand back to you, and, you know, it's up to us tonight to get as much information as we can out of those 3 people.
So thanks, Joe, and you're not getting off that lightly. I will be back to you later in the show, but I'm going to start with Adam. And as Joe said, you know, 2/3 of the loans to Cultivate come from, we'll say, the beef and suckler sector. So we might just get a feel for how the beef and suckler sector are doing. But maybe first, you might tell us the story about your involvement with the credit union and how your family ended up on the Late Late Toy Show.
Yeah, it's actually a credit union. I look at it, we're members of the credit union here in Ballyconnell since I was whatever knee high, and that's a while ago. And look at the family here. There's 4 little lads here, and each of them have an account, as many families do. And he was lucky enough, William, the second lad, in December 2020 to win €1,000 in the local credit union draw. that was Christmas 2020. And like every good farmer, it was born in his pocket, and he wanted to do something with €1,000. So he bought calves actually that spring, in the spring of 2021. It was during COVID, and they were at home here, and obviously it was a madhouse, and that got them out to rear the calves in the yard. And look, it was brilliant. It was a really good project for them. It developed a work ethic and you know, a love for animals and a love for farming and all that. And he actually wrote an article in the Farmers Journal, would you believe, about it, and RTE picked it up, and that went on a video on Twitter. Sinead Brennan done it. That went viral, went around the world. He got a lot of comments from America and all over, and it ended up on the Toy Show then that December, talking about the calves and talking about everything. So it all started off in the credit union in Ballyconnell, would you believe? Yeah, it's a nice little story.
It's a great story. How many views did that video get? I remember at the time it was 800,000 or 900,000. Like,
yeah. I don't think it tipped 1 million, but it was well up there.
Close.
No, it was. No, it was unbelievable how just it took off, and he's a real little farmer, and I suppose that maybe resonated with people. Yeah,
he's nearly a bigger star than you, Adam.
He is. He was. He is, David. No, not yet.
But nonetheless, look, you definitely have some wisdom to impart. So tell us, like 2/3 going to the beef and suckler sector, beef and suckler family farms around the country. What's the mood among beef and suckler farmers at the moment?
I'd say it's pretty good, David. Like over the last 5 years, suckling has come through a tough time, maybe in terms of, you know, supports going down. But, you know, weanling trade in the back end was a really, really positive trade. You've got good exports again. You have a really healthy export trade there at the moment. A lot of demand from Eastern Europe for weanlings. And in general, there's a pretty positive mood. You see guys out there giving 2,500 for in-calf heifers. And when you see that taking place, that means there's a bit of positivity about the future. And yeah, suckling, I think, is back in vogue again. You know, people are back wanting to breed those really top weanlings. Obviously, that announcement of that scheme, I know we're going to talk about it later, but that's a big, you know, shot in the arm too for suckling, and the sector in terms of funding coming into that sector is worth 250 million over the next 5 years. That's massive in terms of holding people. I don't think maybe it'll encourage people into suckling, but it'll definitely hold people in suckling, and that's really important for rural Ireland, and especially the west of Ireland, where we have not a lot of other enterprises that we can go to. You know, suckling is the main one.
So numbers have been on the decline. Cow numbers have been on the decline, Adam. Are you expecting that might stabilise now?
I think it might. Yeah, we're looking about a 3% tracking 3% decline year on year. I think we'll probably keep going at that. But I know there's factory analysis there that could suggest that it'll be there as low as 650,000 by 2030. I don't think, to be honest, it'll get there. I think it'll maybe stabilise before we get there. We're sitting somewhere around 930,000 at the minute. I'd say maybe 700, 750. I'd say that's where we'll go. And that's a substantial national herd. And as I said, for much parts of the west of Ireland, there is nothing else. There's only, so we can talk all we want. And I know there's no comparison between dairy and obviously suckling as regards income earning potential. But if you're on the side of a mountain in West Cavan, you can't go dairy. And so we need to be very cognizant of that and the role that those suckler farmers can play in rural Ireland, and also with our environmental objectives as well on those farms.
So there's a lot of Northwest people that are farming in the Northwest on this call, but Philip O'Connor, my colleague in IFAC, he's down in South Tipperary in the heart of the Golden Vale. Now, Philip, without talking about how good the land is down there, you might talk to us about the schemes and how the world has changed for farmers this year, because the schemes have all changed. So what has happened?
Well, the new schemes have come in. So we're on the start of our next cycle of CAP. So CAP runs in give or take 5-year cycles. So we're now moving from the BPS, the basic payment era, to the BIS era. And I suppose the big one on it really is the division out of the schemes from what they previously were, which was the basic payment entitlement plus your greening, to now you have your CRIS, your BIS, and your eco schemes. And without going into mass specifics on it, because Brian will cover some of this, they're all applied separately. Whereas before you would have just got this entitlement payment, you're now getting your CRIS payment, you're getting your BIS payment, and you're getting your eco payment. From a financial point of view, I suppose the eco payment is no longer linked to the entitlement. So therefore the value of the entitlement has decreased. So you're hearing some of that around now with farmers going, when they're leasing out their entitlements or renting out their entitlements or renting them in, you're no longer renting in this eco element of it. You're just renting in the BIS element. So that's changed the valuations on it. We're definitely probably seeing, even within the last couple of weeks in IFAC, where we're talking about farmers who a little bit more chatter about possibly cashing in the entitlements, whether they should be selling them, if you know what I mean, and getting a value on them. That does bring in issues around CGT and valuations on them. You were mentioning some of about our dairy sector, if you know what I mean. A lot of them would have been in companies and would have been leasing in their entitlements into the companies. They're definitely starting to look at now, will I sell my entitlement into the company and so forth. So I suppose the calculation, how it's been done, has definitely changed. So with the convergence as well, some farmers, so your overall payment, depending on what your value was, mightn't have changed much. Some people are going up in value, some people are coming down in value, and depending on how the CRIS works. But the value of the entitlement on your balance sheet has definitely changed because the eco scheme is no longer linked to the entitlement, so therefore it's no longer an asset. So you've definitely seen that, and I say to maybe a small shout out there to Adam in the Farmers Journal. There's definitely been a bit of talk about it in recent weeks with Darren Carty and his articles around the valuations in this and how it's going to work, and some of the tax considerations around it.
Just Philip, at a high level, winners and losers in this change. Who've been the winners and losers in the new CAP scheme?
I would say probably the biggest losers, and this is anecdotal now. I have no scientific evidence on this as such. Would probably be the larger scale tillage farmers with substantial land banks, if you know what I mean. That would have built up rental land, if you know what I mean. And they're getting hit a bit on the twice. One is probably you would have had some farmers back in the day that would have stacked entitlements through the B process and so forth. So they would have quite a high value entitlement. So because of convergence, they're getting particularly hard hit, if you know what I mean, because their overall value is coming down and the eco scheme is a flat rate. They're also getting hit as well that CRIS is a forward payment, if you know what I mean. It's based on the first 50 hectares. So anything above that is getting cut, if you know what I mean. So the more hectares you have. So definitely those larger scale with the larger land bank guys in the tillage sector are probably getting hit the most on it.
And Adam, I'm sure you're seeing an awful lot of maybe smaller suckler farmers who had very high value entitlements in Cavan and Roscommon and Galway and Mayo and Kerry. They've been hit as well.
Yeah, absolutely. There's huge changes coming down the road there, and there's a lot of, I suppose, understanding of that, what's going to happen, and really that won't be almost understood until October time, until that check hits the account for lots of farmers. I'd fear possibly for this full-time suckler farm in the southeast, because there's a huge amount of pressures coming in on that farm. You know, the convergence, as Philip has said, is hitting them, but also they have land use pressures coming from around them, maybe in terms of dairy farms or in terms of other enterprises, you know, eating into that, we'll say, land if they're renting land, and their possibility of getting into an environmental scheme down there as well is maybe less, as opposed to a more extensive farm in the northwest. So there's pressure there on that full-time suckler farm. I think the part-time farm in the west will get away okay, but the full-time suckler farm, I'd be worried about that. Okay,
Breen Carroll, you're very welcome. You're General Secretary of the Agricultural Consultants Association. The agricultural consultants all around the country, both the independent guys that you're involved with and the Teagasc consultants, you're busy at the moment with all these schemes and the changes.
Yeah, thanks, David. First of all, thanks for the invitation, and also to Joe. Pleasure to be here tonight, and to everybody that's tuned in. So it's an exceptional year, David. When I started working, I remember there was 2 or 3 main deadlines on an annual basis. I think this spring there's over 20 separate deadlines alone for advisors to work with farmers. So that's just an indication of the mammoth task that's ahead of us. And indeed, the ACA members around the country, we have grown rapidly, David. We would cater for around 55,000 farmers providing advice. We know from published figures, Teagasc is about 43,000 farmers. So, you know, there's a big cohort of Irish farmers, which is a major positive for the industry within Europe, because it means that 3 and 4 farmers are getting good technical advice on a regular basis. The challenge, and Adam has mentioned it earlier, the challenge is we 40,000 farmers don't have a direct link with advisors. I'm not saying they all have to be linked to our businesses, but if we're trying to get buy-in from farmers and meeting targets over the next 10 years, we have to be conscious that 40,000 farmers don't get any direct information from the sector, David, out to customers. So it is exceptionally busy. TAM is another one, David, that we launched. Philip has gone through the BIS and Eco scheme, absolutely. There will be a big change in entitlements. There are about 15,000 individual entitlement transactions on average the last few years. There's going to be probably a major number of those of farmers looking at those entitlement values, looking at the little bits of entitlements they haven't used. The clawback has been removed now, so will they be encouraged to sell those, David, without a clawback? I think they will in some cases, where people are not going to go out and try and get expensive land to draw down those entitlements. So there's a lot happening, and TAMS has now been published, David, and some of the schemes again of TAMS were announced yesterday, and there's huge interest in the TAMS also.
We're now in TAMS 3. What's new in TAMS 3?
So I suppose at the outset, I think this is exceptionally positive for the sector. As at the end of 2022, there was 390 million was spent in TAMS 2 from 2015. All of that went into the local economy. Everybody got their piece of that cake. I think it's exceptionally positive that our government got TAMS 3 opened relatively quick after TAMS 2. I remember, David, back in 07, 08, 09 and 10, when we hit a recession, there was no structural grants at all for farmers for a 2 or 3 year period. And a lot of farmers lost out. And it's like a Christmas wish list at the minute, David. You can get grant aid for practically anything in TAMS at the minute. There's a whole load of suite of new actions and new items being added. You can get cattle fencing now, which was never there before. You can get solar panels, and a big change in solar panels is you can now link in with your dwelling house. The planning permission has been removed. It's made now exceptionally easier compared to what the conditions were in the previous TAMS for solar. Underpasses are there. The solar fencing and the solar pumps, David, from water to try and encourage farmers to protect water courses. All of those, and even machinery now has been added into the animal welfare scheme, which is the traditional hardcore TAMS, which would be for farmers over 40 years of age. But there are now 10 different sections, David, in TAMS this time. And that includes one for the young farmer again. There's now a brand new women's part of TAMS. There's the solar on its own. You still have the slurry emissions grant, and the slurry, the ceilings for those at 40,000 and 90,000 are separate to what you can get under the AWNSS for the farmer who wants to put up sheds, and the young farmer separately. So there's huge scope. All you need is money off Joe, and you can build away.
Yeah, so the Cultivate loan along with the TAMS grant is look at it, it's a nice mix, and we would definitely be pushing that. Philip, just in terms of getting paid, because this is sometimes an issue. Even though, as Breen has said, everything is opened up a little bit more and there's great grants available, getting paid, and especially where people have new structures like registered farm partnerships, limited companies, what do people need to keep an eye out for?
Well, the first thing I would say, and Breen hit it there in the head, there's a myriad of schemes out there, and that's excellent. That's good for farmers, but every scheme has its own picadillos and complexities, and they don't all sometimes 100% gel with each other, if you know what I mean. So I always 100% recommend anyone who's going for any scheme to get a good ag advisor, whether it's Tagus or from ACA, like if you want a good independent, because it is very important that you know the fundamentals of the scheme. And a good ag advisor will tell you that. But the key things, I suppose, around it, when you talk about then where does this link in with accounts, if you know what I mean, and what we do as accountants. And I suppose when you're doing a TAMS grant, there's certain criteria you must meet. But one of the key ones is about how you get invoiced for it and how you pay for it. And I have definitely seen over the years in the old TAMS people making that mistake, if you know what I mean. So, and when you apply for any scheme, it's linked through your herd number. So your herd number being in line in what you are actually doing revenue. So whether that's been a partnership, a sole trader, a company, that they all align your bank account. And I have seen issues over where a farmer was telling their advisor was knowing one piece of information and their accountant was doing another piece of information, and neither knew what neither were cross-checking, if you know what I mean. In other words, the herd number was in a sole trader name and their accountant was returning their tax return as a partnership or a LTD, and therefore the invoices weren't matching up. And it does lead to a lot of hassle. And if you do get it wrong, you can't go back and start again, if you know what I mean. So I always say to any client that's coming into us and they're looking at applying for a TAMS or a scheme like that, going that, have you checked with your advisor that everything is correct? That the advisor then will probably come back to us and say, what trading structure you're going through, is that farmer trading through? So they make sure that everything ties into place. So therefore, when you do make your claim to get your payment, there is no problems, if you know what I mean, from the paperwork element. But I suppose it's just getting those checks and balances right at the start. You can't go back. Like if you use the wrong bank account or the invoices come in the wrong name, it can lead you to problems with claiming your VAT 58 back from revenue, never mind claiming your TAM. So it is important to get these little things right at the start. And a good advisor and an accountant that understands some of these schemes will make that process so much easier.
Okay, good. Adam, are you seeing an appetite to invest in TAMs in the journal? What do you see as the most promising parts of the new TAM scheme?
Yeah, we've had a massive amount of inquiries, David, over the last number of weeks, and people chomping at the bit to get going. And it really, I think, is it 464, Brian, in terms of items or that are grant dated under that TAM. So it really, you know, farmers need to study it hard. There's a huge interest around calving cameras. I don't think they were there before. A lot of farmers asking that. You know, calving gates as well. You'd be surprised the amount of suckler farmers that still don't have a good calving gate on their farm. This is a massive opportunity now to put them in this new TAMs. And fencing as well, I guess. Look, at fencing is always money well spent in terms of maybe putting in some paddocks and you know lifting that grazing management to a higher level. So I think there'll be massive interest there, and it's not as if it's a big massive investment of 100,000 on a shed, David. It could be as small as 600 euros for a camera. So I can see a massive amount of applications coming for this new one.
Okay, good. Joe, we weren't going to let you off the hook there. So you're a member of the very fancy titled European Economic and Social Committee. I know you're out in Brussels quite a bit. What's happening in Brussels at the moment that's going to impact on Irish farmers? Maybe talk about nitrates, because look, we haven't talked too much about the environment yet. We will as the conversation develops. But what's happening in Europe at the moment that we all need to be conscious of? And you're just on mute there, Joe.
The big thing that has happened in Europe in the last few weeks has been the elections in the Netherlands, and that has been the talk of the place over there for since the election took place. And the BBB, as they're known, and anyone listening last Saturday morning will have heard the leader of that. I think her mother is from Limerick, actually. I can't think of her Dutch name now, but her mother is from Limerick. But and it's a backlash. Now I suppose we've all seen the protests in the Netherlands, and that came about as a result of the Prime Minister Rutte. And the sanctions that he was imposing, and particularly around nitrates, and more or less forcing farmers to have to sell land. So, there's only so far, and this has proved it, that farmers can be pushed. The Gilets jaunes in France there a few years ago started, a plethora of similar things right across the EU. So, I've said it before. Two of the biggest challenges that European agriculture have, we're used to talking about climate change, the Ukraine invasion by Russia, etc. I think the collapse of the American banks recently is another huge challenge. But in my eyes, two of the biggest challenges we have lies with two men. There are two commissioners. One is very strong. One isn't as strong, and I'm being very kind there. And those two commissioners are the Commissioner for Agriculture and the Vice President Timmermans. And he just seems hell-bent on the Green Deal at any cost, farm to fork at any cost. And it's difficult to make any headway with them. But I think this has been a wake-up call. The Dutch elections has been a wake-up call, badly needed. Because farmers are suffering. And like if we look at the nitrates here in Ireland, you're probably talking about the liquid milk supplier, intensive supplier, dropping half a cow per hectare because that farmer is in derogation. And if that derogation, I saw a figure there recently that if we drop from the 250 kilos of organic nitrogen per hectare down to 220, the dairy farmers in derogation would need 69,000 extra acres of land. Now, that's a sizable amount of land, just to kind of put things in perspective. But the bands changing from a one-size-fits-all of 85 kilos of nitrogen per hectare, per cow, and 60 per dairy cow, and 65 for the suckler cows. Now that's changing, and cows with less than 4,500 kilos of milk solids, they drop slightly to 80 kilos equivalent. The cows between 4,500 and 6,500, they jump from that 85 to 92 kilos. And the cows over 6,500, which would be the intensive, liquid milk supplier, they go to 106. So that 106 compared to the 85 up to now. And then if you drop from the 250 down to 220, it's going to be very serious. And, unfortunately, right across Europe, there's only, I think we only have one other country as well as Ireland. And, in fairness, the IFA would have fought very, very strongly over the years to keep that derogation because it's so important to Ireland, to farmers, to processors, and to the economy at large. So, it's the disquiet that we hear in Ireland, well, that disquiet is replicated right across Europe because it's to see it as a race to the bottom and a way to try and edge out the good, efficient farmer.
I think the last few minutes between all the changes in schemes, TAMS changes, nitrates and banding changes, especially for the credit union, maybe marketing officers and CEOs that are on this call tonight that maybe aren't tuned into farming every day of the week. It just shows how complex farming is for farm families all over the country. But Joe, are you saying that, when when the Russian invasion of Ukraine started, there was a lot of talk about food security. Are you saying that hasn't moved the dial in Europe at all in terms of rowing back a little bit on the Green Deal and making sure that we are food secure?
It definitely halted it. And just before I answer that, I think for the marketing people, David, and you've been part of that training and to give, I suppose, confidence to farmers when farmers do go into the credit unions that are in Cultivate to get finance. The people that they're speaking to in there, in order for a credit union to participate in Cultivate or to become a member, their staff people have to undertake training, and that training is carried out by the likes of yourselves and Philip O'Connor there from IFAC and Breen and other people who train them up in the jargon and the lingo and the changes and the many changes that are taking part in agriculture. But yeah, and I've said it at a number of meetings in Brussels that it's just a pity that there has to be a crisis before food security is talked about. If we go back to whether that was COVID, whether it was Ukraine, and that's not gone away. So the Russians are still in Ukraine. Ukraine are the breadbasket of the global breadbasket, you could say, and definitely of Europe. So, Russia is still there. So I think that it definitely you highlight into that the Green Deal, the EU Commission were very slow to do any sort of an impact analysis on it and was left up to the USDA, which is the US Department of Agriculture, to do an impact analysis. And they found that it would and it would also lead to an extra at least 22 million people, falling into the food poverty section that we talk about right across the world. I think that was being very lenient, towards it. It will obviously, but on the other hand, we talk about the Green Deal and climate change. Green Deal was hardly put in place when you had Secretary Vilsack in America calling on like-minded countries around the world to come together to form some sort of an alliance or coalition to provide extra food that would be there as a result of the shortage that the Green Deal would cause in Europe. So, Europe is well regulated as food suppliers, well regulated kind of in relation to climate change. And we need to be careful because if we reduce our food output in Europe, it's going to be taken up by South American countries, etc. And they're a lot less carbon efficient than we are in food production.
It's quite a slow. It's quite a slow-moving wheel, isn't it? European policy, Joe. Like it's almost the next round now, isn't it? In terms of 2027 onwards, where that will say food security could start to kick in. So, but it'll almost take a few years for that to get round, won't it?
Oh, absolutely, Adam. And like, I think the further that you go out the way, if you're talking at a local committee here in Galway, we think at times that things are slow moving. Then if you go nationally, you think that they're a lot slower moving. But when you go to Europe, you're dead right. They're incredibly slow moving, and things that are being talked about now, it could be 3 years time, it could be 4 years time that we feel the full impact of them. But, that's up to us and lobbyists to highlight those issues to the policymakers, and you'd hope that some of them will listen, and you would hope that our man in agriculture would push stronger against some of the what's being put in place.
And just Philip, you might just pop in there and just what did the nitrates issue financially? What difference is that going to make to farmers?
Well, both Joe and Adam touched on it a little bit there. Like, I mean, Joe said a figure there about potentially half a cow per hectare. So, like, at the end of the day, dairy is a profitable industry, if you know what I mean. So if you have less cows, you're going to have less turnover, so it will impact on your profitability. Like, we did a set of figures there for the Irish Grassland Association earlier on the year, where we looked at the 220, and it could potentially have a knock-on effect on profits of up to 50%. Now, it was very set of scenarios, but I mean, it was an extreme example, but it will impact profits 100%. Like, and I suppose where I'm seeing it already, and it probably would have started about a year to 200 years ago, when we were looking at loans for farmers in the dairy sector. Whereas before, we wouldn't have really been getting massively into stocking rates. We'd have been happy to accept the farmer's figures saying, I'm going to milk 100 cows, I'm going to go to 120 or 130. Do you know what I mean? And do it. Whereas definitely now, when we're doing a loan in the dairy sector, we do have to evaluate the stocking rate and how it's going to fit into nitrates. And be considerate of the fact, especially if you're going into those longer term loans, if you're talking about a highly stock rated farm and you're borrowing and you're leveraging it reasonably high at a very high stocking rate, what is the probability of that farmer being able to maintain that stocking rate at its current land base, if you know what I mean? Is it going to have to go out and find more land? And we're seeing that already. Adam touched on it. Like, I mean, land rental markets are being driven a large space by dairy farmers having to go out and rent more land or more costs. And that is going to affect the profitability on it. So definitely the nitrates is definitely very much feeding into how we do projections and looking at the more longer term about the profitability. It's not saying by no means that dairy farmers are unable to borrow loans, but we do have to take into context that they're not going to be able to expand unlimited, if you know what I mean, on their land basis.
Okay, talk about land. Adam Woods, the Farmers Journal have been putting out a whole range of headlines about big prices being paid for leased land. What's the summary at the moment? And is there big prices being paid for land in Cavan?
Yeah, probably not in Cavan, unfortunately,
Yeah.
David. It's down south, probably. That's what the big pressure is, and that's what the big pressure is nitrates is. And look, at nitrates is having a huge effect on dairy farms, but there's a massive knock on then onto other enterprises, because, as we said at the beginning, your full-time suckler farmer, I feel for that farmer, because if they have been renting land and they were unfortunate enough for it to come up for review maybe in the last couple of months, they've been pushed out because the dairy farmer is economically an awful lot stronger, can come in there and take that land. And it's not taking that land, but it's paying maybe 300-400. We've heard even 500 there in Kilkenny over the last number of weeks, and that's just out of the reach of suckler farmers, because it's not economically viable to do that. It probably is in the dairy side of things, because of the economics of dairy, and if they have to go down in cow numbers, they don't want to do that. So it's the knock-on effect, I guess. While all the talk has been around the implications of nitrates on dairy farmers, everybody else is going to feel that as we go.
I think that's tillage farmers as well are beginning to talk
Absolutely.
about how they're struggling to get land. Breen, are you seeing big demand for land in Mayo, where you're based, and in North Roscommon?
Yeah, as Adam said, it wouldn't be at the same rate as maybe where Philip is, David, but absolutely there's a huge demand in the pockets where Darien is strong in the west of Ireland, in the strong traditional suppliers to the co-ops up here. The land is under the same demands. You also add in, David, that there's a very attractive young farmer scheme where people can get land and get very, very good payments. You're talking about in around between base eco and young farmer top up on the National Reserve as naked land, getting around €550 per hectare. So around 220 an acre into your in checking the post next November, guaranteed for 5 years. And that's driving it. We're waiting on a 1.3 billion forestry program that's going to land and is going to be attractive for some farmers that can maybe allocate some of their land towards that. So it jumped 2,000 an acre overnight up here, and that's only driving it on for farmers in the local areas trying to get their hands on it. Just a comment on the nitrates. Look, I'm always curious as to why Ireland overall is a lowly stocked country. And I stand corrected, but I believe that in the 60 or 70% of Irish farmers are under 100 kgs of organic nitrogen per hectare. I think we can find innovative ways to help dairy farmers to take slurry off them. At the minute, they're sorely relying on their neighbours, their own farms, all of that. I remember working in Holland 25 years ago, doing work experience, and they were exporting slurry from the intensive areas 150 miles north in Holland to other farmers that their soil fertility said could take that slurry and still meet all the environmental regulations. I think we need to be a little bit creative here to help farmers who are in those positions. And it's a matter about collaboration and coming together. There's plenty of farmers, David, in every part of the country, even you know up where I am, where a dairy farmer doesn't have any relationship with their neighbours and they could easily come to some agreement on taking in slurry.
And Brian, I think it's a fair point, and anaerobic digestion may have a role to play there. We might get back to that later in the conversation. Joe, just you're a full-time dairy farmer. In your discussion group, what's the commentary at the moment around land and nitrates?
It's very concerning. You know, the lads talked there, and when I talked about the half a cow per hectare on those intensive farms, you're going from, give or take, if you're in derogation, 3 cows to the hectare at the moment. You're allowed 250. The 3 cows brings it to 255. So that band where it goes to 106 for the over 6,500 kilos per hectare, that will reduce it to 2.4 cows per hectare. So that's where the half a cow comes in. And then it just depends, you know, and Philip touched on the profitability there. But, you know, dairy farmers in discussion groups, dairy farmers that are kind of go-ahead dairy farmers, they want every cow on the farm to be profitable. They don't want any waste animals on the farm. Just get rid of culls, get rid of ones that's not in calf, ones that are not performing. So every half cow that you're out, every 2 hectares you're down a cow, and that's a sizable drop in the income. That on the back of, you know, land leasing is expensive, you know, and milk price probably falling, we'd say, for the last 2 months, and you know, all the signals are that it hasn't hit the bottom yet. So, but you know, in fairness, discussion groups, I think, and I know our one in particular, we never get too carried away on a year that the milk is the likes of last year. But you never get too depressed when it's very low either. If we go back to 2016, like I remember the Virginia show in 2016, and the day before it, Lakelands rose the milk price by 0.5 cent per litre. Now I think, and I'm open to correction here, it either went from 22 to 22.5 cent per litre base, or 22.5 to 23. But there was a great atmosphere. Dairy farmers had seen that 30 months without a milk price increase, and finally we had seen the curve turn. So, you know, we don't get too depressed in 2016 when the milk price was low either. So you take it on 5-year averages, but it's all the other things coming in on top of it, the likes of the derogation. And, you know, Europe, as I said, has closed in on the derogation. Flanders, they expire at the end of this year. Denmark has it until the end of 2024. You know, and we're the only other country that has that derogation there. So, the lads have touched on, you know, bank loans, you name it, has been taken out on carrying X amount of profitable cows per hectare. So it is very concerning, you know, but we do need to, I suppose, minimise the damage, limit the damage and the impact, the negative impact it will have on dairy farmers.
Okay, we're going to change the pace. A couple of quick fire rounds. Should farmers be buying fertilizer today? Adam Woods.
I suppose, yeah. Look at it's getting to the time, David. I think they do. Look at 1st of April is a first week of June cut in terms of fertilizer applications. We need to be very careful now that we get enough fertilizer out to make sure we don't hit fodder shortages in spring 24. I'd say fertilizer prices have maybe stable. They've been dropping over the last number of weeks, but it's time now, I think, to bite the bullet and go out and get your silage complement anyway, and definitely get that grazing ground once conditions improve. Look, the conditions are very, very poor in the northwest at the moment for fertilizer spreading, but yes, quick answer, yes.
And in terms of price for, we'll say, the main types of fertilizer, say protected urea, a lot of talk about like farmers going across the border, getting fertilizer out of Northern Ireland at a much, much more competitive rate.
Yeah, we've always been known up here for our innovation along the border, and that's that's one of them. As regards moving up there, yeah,
we won't do an Alan Jukes on it here now.
Okay. No, it's definitely, I see a lot of people, David, moving north here at the moment. I'm just 4 miles from the border, and probably prices here are reflective of that. The fact that we're so close to the border, you're talking probably can there around sort of 520, 540 urea, standard urea, sort of up that 620, 640. Protected urea obviously a little bit more expensive, and the split's probably up at 700, a little bit across it, but definitely a long way off the dizzy heights where we were at Christmas and early January.
Joe, are you able to source fertilizer at those type of prices?
Unfortunately, David, I don't have to source it at the moment because I bought it. We bought it at the back end of last year, and again, it was a discussion in the discussion group, and there was probably a greater fear of it not being available. So unfortunately, we have it bought at the high price. So it's there, but I would say, and I while agreeing with what Adam has said there, I would still say that at this stage, to just buy what you need and what you need to apply. And if you have a bit in the yard, I spoke to a merchant the other day, and he said, look, he said, if you have it, he said, put that out and wait until you need it to come back for more. I think that the work that the IFA have done in relation to bringing down the loads of fertilizer, and 1 or 2 loads have come in here into Galway. Pat Murphy, the regional chairman, has been organising that. I think that has put good downward pressure and extra pressure on the merchants here in the south, because there was very little move, and there was a survey done about 3 weeks ago where there was a difference of €140 a tonne on average between the fertilizer prices here in the south and in Northern Ireland. But the fact that fertilizer has been brought down, that gap has narrowed somewhat, and look, it needs to narrow up a lot more. We need to be able to get fertilizer here at the same rate as what they're getting across the border. Well, I won't say across the border, I'll say in Northern Ireland.
Breen, on that very politically well handled note, Joe, Breen, your farmers, like you're working in Roscommon and Mayo, there'd be some intensive farmers among your customer base, and there'd be some pretty extensive virgin and organic farmers. What are you seeing around fertilizer grass growth at the moment?
Yeah, so we also look after some fairly big beef finishers, David, and some of the best suckler farmers in the country up here. And absolutely, I agree with Adam. In a simple word, you have to consider fertilizer. Most of those type of farmers, David, on the livestock side, are not going to get the return on their fodder or the crops this year without applying. They won't get it in just on slurry alone. We've been fortunate, probably February was good, although grass growth is still average up here. But into March, we're hoping for a good April. But, I remember 6 or 7 years ago, farmers were feeding silage up here in mid-May. And if farmers don't get enough fodder and allow for it, which will need intervention of fertilizer, David, to get your return. If you don't do that, and we hit a bad winter or a bad spring, I'd be fearful then that there's going to be a shortage of fodder. Notwithstanding there was a fodder scheme, it was a big success, a lot of farmers took on it. And my last comment, David, is, in the long term, no one should be putting out fertilizer in today's world without understanding what your soil requires. Basic scientific evidence with soil samples. The Department of Agriculture launched a new alignment scheme. I think it's going to be oversubscribed rapidly. It's €16 per tonne of a grant to put out lime. And I remember, on a positive side, David, again, we're now encouraging farmers to put out lime when we're told when we were in short trousers that lime was needed on soil. Now we're paying people to put it out, and it's going to be a huge uptake on it. So I would say yes, fertilizers needed. You need to take your soil samples of the cost of fertilizer, and you need to get your pH corrected in your soils straight away as soon as possible.
I still see you around Kilmore in short trousers though, Breen. So
I don't mention that tonight, David.
David, I think just very importantly, Breen has raised the issue there of soil sampling, and I think that if the four of us, or if every one of us majored on that tonight, we still couldn't get a strong enough message across.
Because it's good for the environment, it's good for a farmer's pocket.
It absolutely is. And there's, I don't know, and Breen, you probably have more. We are moving in the right direction. I know a number of years ago there was only 12 to 15% of Irish soils at optimum nutrient value. That's up around 21% now, but it's still a shocking low figure.
Yeah.
And like if you haven't the pH right, if you haven't the P's and K's right, well then you're not going to get the work or the return from the nitrogen application. And I think that that lime scheme that's coming in, and Breen, I think the closing date for that is it the 20th of this month?
20th of April, Joe, yeah.
So the message would want to be got out there to farmers to apply for it.
And just on that, Weber, just one quick point is that if your soils are not at optimum level, 50% of fertilizers like 18-6-12 and 10-10-20s are lost, inefficient, and the cost of fertilizer. So if nothing else, as Joe said, it is critical that you have to know what your soil requires.
Okay, I think that's a really strong points, guys. Philip, quick thing about farm structures for the audience that are on the call tonight. Farm structures are changing. They've changed a lot in the last few years. An awful lot more limited companies, farm partnerships. Just a quick overview.
Yeah, well, I suppose the big change would have been back there in 2009 when the quota restriction was lifted and going limited companies for dairy farmers. So, but if any of us remember back then, probably the worst year in living memory for dairy farmers. So, it was usually about 2011, 2012, it really picked up pace as regards farmers going into limited companies, particularly the dairy sector, and that's been gathering. That's continued since that day. Like, I mean, last year was a very high profit year in general for most dairy farmers. So yeah, the revaluation, I suppose, of farmers going into companies is continues with dairy farmers. In IFAC, we'd probably be upwards of over 40% of our dairy clients now in companies. So it's a very tax efficient way of doing it. It's not something that should be done lightly. It's a long-term tax saving measure. It's not a short-term measure. Like, you don't go into a company today and in a year's time jump out of it. The other one that's coming on that's very, very popular, and Breen touched on a little bit there about schemes and young farmers and such for like that, is the registered farm partnership. And it's a great structure. And from my point of view, what we see in IFAC is definitely seen as a succession tool. So it allows a son or daughter come home onto the farm, get involved in the farm, if you know what I mean, claim the grants as in the young farmers top ups, the national reserves and so forth with me, like, so that's a real bonus. But they're actually actively involved in running the farm as well, because a partnership is a business structure, but you're not handing over assets quite yet, if you know what I mean. So it's a joint business structure and you're farming together. There isn't an asset transfer immediately, so it allows the evaluation, I suppose, of a son or daughter to be involved in the farm, to have a say in running the business, have a profit share in the business, and all going well, take over the business down on the line. So partnerships definitely come very popular in that. Kind of re-echoing about what I said earlier on about the TAMs and stuff, getting the structures right is really important. Making sure that it is a legal entity, it is a legal structure. It is very important that you get the correct accountancy and legal advice around it. Like, I mean, I have seen, I suppose, some car crashes where these things have gone wrong, and invariably when you go back into it, the parties weren't aware of the commitments and what they were signing into, if you know what I mean. So it is important to spend a bit of time, sit down with the likes of Breen, whatever, and say, well, how is this going to work with my schemes? Sit down with your accountant and go, how is this going to work from accountancy? How is this going to work for succession and your solicitor and so forth? And when it's done correct, they're super schemes, they're super structures, and they work really well for the benefit of the family.
Okay, good man, Philip. The Department of Agriculture have got a lot of praise tonight, which is not the norm, but they have got a lot of praise tonight across the board. So that's quite positive. Outlook. So we just quick talk about outlook for the next 6-8 months, as far as you can see with your crystal ball. Beef and sheep, Adam.
Yeah, but on the beef side of the house, it's going to be pretty positive, David. I think up until June, July time, definitely in terms of, we'll say we would have forecast, supplies, finished cattle supplies tightening a lot for Q1 and Q2. That hasn't happened, so I think that's going to kick on now into maybe the end of the summer. And I'm looking around the world as regards, China, insatiable demand there for beef. To put it into context, like we exported 550,000 ton of beef in 2021. They're going to need an extra 675,000 ton of beef in 2023, which is massive. And that's going to concentrate efforts from South America on that market. So it takes the heat out of Europe as regards, and it allows us to go into that high price market. And even in the US, in terms of really, really tight supplies over there, tight supplies in the UK. So I think, short term, even longer term, it's all pretty positive. And we talked at the very beginning, skep is a massive injection, 150 a cow into sucklers. We're waiting on a beef best. That's another 28 million. We're going to see a lot of applications in there. That's getting up into 200, 220, 230 a cow, which is a massive support. And look, we need it all on the beef side of the house. 139% of farm income comes from direct support. So any increase in support is a direct impact on farm incomes on those farms. So generally positive, cautiously positive, David.
So for the farmers that are going into Cultivate offices, and there's 150 of them around the country, getting working capital to buy cattle for grass in the next few weeks because there's grass going to come and it has to be it. Are you saying to them, go out and bid like?
Yeah, I have a crystal ball here, just up behind me here. I should take it down every week, David, before I write beef trends, and we have a bit of a whirl of it. But no, look, I think as far as I can see, I don't see any hiccups. Look, you never know, I guess, but definitely going forward, export trade for weanlings. Exports are record. We're record for the first 9 weeks. Any year over the last 20 years, if we look back, in a high year for exports, down the road has generally been positive because we don't have the numbers in the country. So to see that export level, those live exports up high is a very, very positive omen, I think, for the future.
Okay, good. From a dairy perspective, we've seen, look at the last couple of months, we've seen 2 6-cent decreases in milk price. Perspective on the next 6 months, Joe?
Yeah, look, I read, I think it was Rabobank there around Christmas forecast that they had done, and they said that the markets would be under a lot of pressure for the first 6 months. Prices would drop. So far, they're right. We've seen 3 consecutive global dairy trade auctions, fall. The prices fall. And I suppose to put things into perspective, just take the butter, for example. And last September, that was making 7,700 euros a ton, and the last trade was 4,300 euros a ton. So we've seen it with between 10 and 12 cent of a drop over the 2 months, January and February, and people would say that it hasn't hit the bottom yet. A figure that I heard mentioned of an average for the year would be about 42 cent per litre. I mentioned Rabobank there earlier on. They suggested that the first half of the year would be under pressure, but that it should return to more normal levels and rebound a small bit in the second half of the year. Supplies globally for the year are only expected to increase by 0.6%, and that's following a fall last year of 0.5%. So it'll be just about back to normal. At the moment, like, we're moving into a flush here and across Europe, whereas in New Zealand, they'll be shortly drying off cows, so.
And Joe, let's be honest, 42 cent a couple of years ago would have been seen as a very strong milk price, as a base price.
Without a doubt it would, but just remember, David, that 42 cent a few years ago would have been excellent, but urea was probably less than 300 euros a ton, and meal was probably half the price that it is now. So, it's
costs have increased dramatically on farm. Input costs have. Philip, in terms of the projecting forward, and you do projections for farmers throughout the year because you're looking at Cultivate applications and bank applications. What's your sense of how farm profitability will be for this year?
Joe threw out a figure there, 42 cents base. Look, of course we'd all like to get paid more. I'm a dairy farmer myself at home as well. I'd love to be getting 50 cents base, but we're not. But from what we're seeing in the budgets and what we're looking at in projections forward, like if dairy prices stay in around that mid to low 40s mark, while definitely profits will be affected compared to last year. But financially, the dairy farmers should be able to, will still be relatively strong, if you know what I mean. It still should be a profitable year. Like, I mean, we're seeing cost of productions into the 30s, if you know what I mean, and we're seeing it probably into the mid to high 30s. And if fertilizer drops reasonably quickly, if you know what I mean, or more, or there's a bit of a pullback in feed, there will definitely be a decent margin for dairy farmers in that. Where I could definitely see problems coming into dairy sector is if milk price dropped into the 30s. We could be getting into break even prices at that stage. I mean, for majority of dairy farmers. So like if it stays in the 40s, we're definitely not going to make as much profit. The profits are definitely going to decrease on last year, but it still should be, the majority of farmers should be well able to make a reasonable sum of money, if you know what I mean, based on those figures. So fingers crossed that we can stay at that level.
Okay. And Breen, just on beef and sheep as well, would you echo Adam's, cautious optimism?
I would, Adam, and sometimes maybe I think I'm just over optimistic in some of these situations, but I think we have to look globally again, David. I think that, there's, speaking out of two sides of the mouth here, we're being told to contract and everything else, and yet our world population is only going in one direction. Even our own population in this country is, there's going to be huge demand for food, David. I think, we have to trump all of the positives still again to all policymakers, all the advantages we have in Ireland over some of the things I said earlier on. So I'd be optimistic. I talk to my own customers. Yes, as Adam said, there has been a great influx exit of some suckler farmers. But remember that the age profile of those don't have a lot of help on their place. The people decided to just cut back, Dave, and have an easier life. But I'm always surprised, David, there's still a lot of young farmers coming into my office still. They're looking at maximising their payments in the scheme to offset some of the losses in income, looking at TAMs to make their life easier, David, on the farm. So, look, I think it's positive at the minute. And the other thing about the supports from the department side is they're guaranteed for 5 years. And the last comment I'll make, David, we haven't, Philip did mention this, there's a very attractive new young farmer scheme. And a lot of people listening tonight, or maybe on Joe's side in discussion groups, if you have a young trained farmer and add them any time over the next 5 years, you can potentially get 44,000 in additional income over 5 years by adding that young person onto the herd number. And that's a huge influx of money into that farm. And I'm even talking to people that have children at 15 and 16 at the minute, David, because by 2026 or 2027, these supports to departments will still be there. So look, anybody listening tonight, the green cert has to be considered. Get your qualification farm, and even if you never use it, you will be eligible for those supports up until you're 40 years of age.
Okay, Breen, thank you. And really, a positive evening in terms of the outlook for farming and agriculture at the moment. Now, we've 2 minutes left. I'm going to hand back to Joe Healy. He is chairman of Cultivate. And Joe, you might just close proceedings. Thank you.
Thanks very much, David. And look, indeed, thanks to your team at IFAC for organising this evening and helping to organise National Cultivate Week as well. I suppose National Cultivate Week is all about highlighting and getting the message out there to more and more farmers that the credit unions are there for business. They know, I mentioned the training already, they understand the sector. First of all, they understand it, but they've also been trained up on it because, as we've seen from the chats here tonight, a lot of things are changing. I think, it has been an excellent debate, an excellent discussion. And it's good to see the positivity there. Of course, there's challenges there, but Breen mentioned the increase in the global population. And, I know it's a big variation, but between now and 2050, there's an estimate there, no matter what surveys you read, there's an estimate there that food production will have to increase by between 60 and 100% to feed and to satisfy the demands of that growing population. I think there's no country in the world better placed than we are in Ireland. Even if we talk about fertilizer, but there's a huge advantage to grassland from no matter what aspect you look at it. The average country in grassland across the European Union, the average amount in grassland is 20%. Ireland is 90%. So from a climate change point of view, from a marketing point of view, we have all the advantages there. Grass is a great source of food for animals. And, you know, we have, on the other hand, then we have Borbia. We've seen the exports to international markets grow every year. I think if we go back 8 years, we have doubled. We've gone up by 100% to over the 16 billion euros we exported this year, gone into 180 countries around the world. The Irish reputation is second to none. And I do think, you know, whether it's co-ops, whether it's factories, whether it's ourselves as farmers, that's a reputation we cannot afford to risk, no matter what. And I think anyone that is willing to risk it demands the full rigors of any law. And I'm just throwing that in there. I'm not saying it for any particular reason, but our reputation as food producers is second to none, and that's where we need to keep it. And the other big thing from Irish agriculture, our annual turnover is give or take 30 billion euros per year. 90% of that is retained within the economy, and 3/4 of all the inputs that farmers use are sourced locally. So, David, thanks for organising this. Thanks, team at IFAC. Thanks particularly to Adam, Breen and Philip for the time they gave this evening, and to the people who came on. I hope that they picked up a lot of valuable information from it. And again, I will repeat that if you're looking for farm finance, think credit unions, think Cultivate, and call into your local branch manager or branch loan manager. So thanks very much.
Joe, thank you.
Night, everybody. Thanks.
Good night now. Thank you.